All right. I'm with Adrian Smith, CEO of First Atlantic Nickel. The symbol is FAN, F-A-N, on the TSX venture. Adrian, how are you this afternoon?
Great. Yeah, no, thanks for having me. Appreciate your time. I know it's busy. All the companies are starting to get going here. We're no different. We're excited to start on phase 2 at our Atlantic Nickel project. So happy to be here and talking to you.
Yeah, we spoke last year. That was an important conversation. A lot of investors really enjoyed that one, and they learned about Awa-Ruite, magnetically recoverable nickel, which is an interesting, unique little corner of the junior mining space. Not many people talk about this form of nickel. So it's been an educational process the last 6 months as First Atlantic completed phase 1 drilling in Newfoundland, and you've been getting assays back and then the DTR results. So there's been a lot of learning out there. You put out some results a couple weeks ago from hole 4 at the RPM zone. And so it's 366 meters of 0.23% nickel, 0.31% chromium. And I mean, you continue through the first 4 holes that have been reported. You continue to demonstrate the continuity here at the RPM zone. So what are the big takeaways from phase 1 so far for you?
I mean, the better than expected, I would say. We always hope for the best, but we're seeing really consistent, really good grades of nickel. Obviously, we have this 30-kilometer trend in Newfoundland, which is an amazing jurisdiction to be able to work in. With the permitting and the government support is extremely valuable in allowing us to rapidly advance this project. I mean, we essentially went from a new discovery last year where we didn't know where we would be focusing on. It was really a ground and pound and targeting program at the beginning of last year, working with the world-renowned nickel expert, Dr. Ron Britton, who's discovered these massive nickel deposits in the past. He was a huge part of allowing us to progress even through a phase 1 drilling, and essentially went out there and found a rock and said, this is it. Like, this is what you're looking for. Go find more of this. So, at the beginning of, prior to phase 1, we went out and we sampled over these large areas and basically defined an extremely, significant target, being the RPM zone. And we're able to quickly turn around with the government support permits in a matter of weeks. We're talking under a month to get drilling permits from submission, which is just unheard of in this day and age, especially in different jurisdictions, even across Canada and the U.S. is to be able to turn that around so quickly is extremely advantageous for the company. And then to be able to have success and show, based on the targeting and the exposure that we saw at surface, we were able to drill 4 holes into the RPM zone, and every single hole hit the target rock throughout the entire hole. Had good visuals, able to see the actual nickel metal that's in the ground, the alloy metal that is a very special Awaruite, as you're saying, is very unique. It allows us to use magnetic separation to actually pre-concentrate the material and create a 1.3 to 1.5% nickel concentrate just using magnetic separation, no chemicals. And that's what we're doing. That's part of the initial process. That's part of the initial program is doing metallurgical test work to show that this project is viable. And the results that we've been getting are showing that, and we're continuing to get them in, and we're continuing to announce them as we go. And we're continuing to see that support come in from our strategic partner, who understands the significance of the economics behind this very unique mineral that basically allows us to bypass the whole supply chain and the high costs of processing sulfide material, which we don't have to do. And essentially pre-concentrate this material on site and have a saleable, highly payable product that doesn't need to go through that supply chain, secondary smelting, processing, roasting, high pressure acid leaching, avoids all of that, bring the cost down, which is really what drives this. So I'm trying not to get too off topic with the results, but the results are showing us that the economics can work. And what we've seen is that the numbers, the first phase, which is, I always say, like, what are the chances that the first couple holes you drill are going to be the best holes, especially when you look at, 30-kilometer long target, massive area, huge open-ended potential here. But to have this kind of success this early bodes well for the additional programs going forward.
Yeah, I mean, the hit rate in phase one is 100%. I mean, every hole you hit, nickel, you hit wide intervals of, nickel and chromium. On April 15th, you reported the DTR results from hole 2 at RPM, which I guess was hole 3 from phase 1. And there was an interesting observation I had from the results of this hole, and that is that the final 21 meters of the second hole at RPM were drilled into a fault zone, but the DTR grades were elevated. So the average of the entire hole was 0.11% DTR, but the final 21 meters was 0.15% DTR. And I know that with a bulk tonnage sort of ore body like this one, that can make a big difference in the economics of the project. So sort of what were your learnings from the results of phase 1 about this fault zone, and why is this fault zone so potentially important for the project?
Yeah, I mean, it was a big surprise for us that the numbers improved into this fault zone. If we had known this, we would have kept this hole going, because this is a regional scale fault that's at least 100 meters wide, and that's tacking on the width to our existing 500-meter wide zone. So we know, because we've drilled 500 meters, we know it's at least 500 meters and it's open-ended. So we're going to continue to push to expand that. Obviously, the rock is heavily broken, and we had some issues drilling it, but that's part of our plan in phase 2 to increase the drill power, increase the drill hole, the actual diameter of the drill, to make it more capable of penetrating through this material in a faster and more efficient way. And what we're seeing is that zone is totally wide open, and that runs the entire length of the RPM zone, the Chrome Pond zone, the Pipestone zone. It runs most of the length of the project, and this opens up to us a totally new target area that we didn't previously know about. So it's kind of, we always talk about the grain sizes of the Awaruite. The rule of thumb is that if you can see it, you can recover it. But when you can't see it, you can still recover it. So that's what happened in hole 3 that went into the fault zone. Is it was not quite as obvious. The drilling was taking longer, and we wanted to take the opportunity to make sure, with the limited time and budget in phase 1, that we could go and do the step outs to the north and build at least the initial footprint to show the potential, which is what we did. But what ended up happening is that luckily we were able to intersect the initial zone here, where you're seeing significantly improving mineralization, and that we believe continues through the length of the whole target area, and is going to be a major part of building a much larger scale resource around that enlarged footprint.
So this fault, this regional fault, how large is the strike extent? Like, how much potential is there to step out along it?
Yeah, the fault runs through the length of the project area, at least. So we have a large scale geological feature. It's an ophiolite. It's a chunk of the Earth's ocean crust. We're targeting within the base of that material. The ophiolite has essentially been accreted to the continent and is now in a more or less vertical orientation. You can think of it as like layers to a book. So we're looking at the bottom layers, or the last few chapters of that book, and that's where we're seeing the highly elevated nickel within the peridotite, the ultramafic rocks that form the primary basis of our target. And in this case, the fault structure cuts along the edge of that. And what we're coming to understand is that this could be related to why we're seeing better grades when you get the fault structure interacting with these primarily high nickel content rocks. The nickel and the silicates are broken down and released. We call them liberated, and they form the natural nickel iron alloy called Awa-Ruite. And that's what is of economic significance here, because of the processing potential of that material to just crush it and separate it with a magnet and essentially end up with a very easily processable material at surface that doesn't need to go and be smelted and can be shipped and concentrated on site to a saleable product and shipped directly to an end user. I mean, that forms the basis of everything we're looking for. So when we see this fault zone having increased permeability, having greater ability for water to interact with the surface area of the material, that's what drives the process of the liberation of the nickel to form the metal alloy, especially when there's no sulfur present. That's making this project such a significant discovery, is that the lack of sulfur. So the lack of sulfur means no smelting, no roasting, no high pressure acid leaching needed, and is really what is driving the focus of this exploration. So when we're seeing that happen in this fault structure, no overprinting structures, no secondary alteration that are bringing contaminants that could be a problem, having this very clean material that can be processed in an environmentally friendly way over a very large scale of a very long life, and potentially contain billions of pounds of nickel. It gets us very excited.
Awa-Ruite. Such a tricky word to say, because it's
I've been told it's Awa-Ruite is the proper way, as it has.
Awa-Ruite. Okay, yeah, because it's from New Zealand, right? Yeah,
that's right. Yeah.
Okay, Awa-Ruite. Okay, got it. I learned something. I'm glad we had this call. So basically, if it wasn't for the fact that this is smelter-free nickel, it would be a lot less interesting at 0.25% average grade. But because this is smelter-free nickel, and smelters are really back in the conversation with some of these executive orders that have come out of Washington this year, the fact that it is smelter-free and you don't have that environmental footprint, you don't have all the cost and all the energy footprint of having to construct a smelter, it's kind of a game changer. So for investors who may not understand this very well, frankly, there's not many comps to you guys. What are you looking for big picture? I mean, I want to talk about phase 2 drilling, but let's go even farther than that. Like, what sort of an ore body are we shooting for here? Like, what's the big picture scale potential that, like, if you drill this out and prove it in a resource or PEA, that you have a very good shot to build a mine? How much scale do we need here?
Yeah, so we look at, when we're doing every phase of work on a project like this being such a significant scale, we look at what the end goal is, and we work our way backwards and say, how do we get to that end goal? In this case, the end goal for a successful deposit definition is 1 billion tons or better, and it's not 2 billion tons. It falls within that 1.2, 1.3 billion tons, which is actually very achievable to do in a very short period of time due to the large consistency and scale of this project. We can step out and have each drill hole widely spaced, and because it's so consistent, we can tie all that material together into a large resource with relatively small amount of drilling, in retrospect to the billions of tons that we're aiming to define. So we're getting to that number based on what the theoretical pit would be. We're looking at a pit shell, and we're looking to drill within that pit shell. We don't want to, drill 700 meters and then come and have a 500 meter cutoff to our resource shell, and then have 200 meters of wasted meterage. So we're really looking at the end goal and working our way backwards. And the reason why it's 1.2, 1.3 billion tons is we're looking at what the economics of operating on a large scale open pit would be. Your maximum tonnage per day is going to be 150,000 tons where it just works. It's comparable, all these lessons learned from copper porphyry mining. This is a shift that we saw in copper. I mean, you rarely get a new copper mine that's being developed that isn't a large scale, low grade copper mine. I believe in, I think our partners believe that we're going to see that shift in nickel. We're going to see much larger contained nickel in these deposits. We're going to see a much longer mine life. The processing can be extremely simple, and the numbers work when you're able to do it at a large scale. So if we do 120,000 tons per day processing, it's a very simple process to do. Crushing, grinding, magnetic separation, no chemicals used, simple magnetic, because this nickel alloy, this Awaruite, is so highly magnetic that it's very susceptible just to be pulled out with magnets. Once you go through that initial process, you're essentially end up with a concentrate sitting at surface that has a volume that's a 90% size reduction. So all of a sudden you have this big upfront processing facility with magnets that's being done, in Minnesota, for example, on the iron ore. This is a very, used and common technology. It's scalable already. Like, we don't need to do any changes. We're just repurposing it for nickel. You're ending up, after it goes through that process, with 10% of the initial volume that you can easily manage through a flotation circuit. And in your flotation circuit, you have a very simple mineralogy. You have your magnetite, your nickel, Awaruite, and some silicates in there that kind of got pulled along with the material. And when you put it through the flotation unit, the activator only binds with the Awaruite, and you end up with a very clean concentrate, which is close to what the actual nickel grade is in the alloy. The nickel alloy is 3 parts nickel, 1 part iron. It's about 75% nickel. And when you float it, you get 65% con. So you have a little bit of stuff that's pulled along in there, primarily magnetite, but it's a very clean product that you have in essentially 2 stages that doesn't need to be, as you mentioned, doesn't need to be smelted, doesn't need any kind of the secondary treatment. So your payability for that product is a lot higher. And you're essentially, if you're comparing it to a sulfide type deposit, even a high grade sulfide deposit, you can cross off at least 30% of your processing costs right off the top. So, if you're going to want to compare these deposits to, a sulfide type mineralization, if you want to look at the grades up front, you essentially have to give our grade a big lift to compare it, because we don't have any of the cost. Or you cut down their grades from all their, the additional costs that a sulfide type ore would have. So really, part of the story here is it's not comparable. It's not apples to apples. These are 2 different beasts. This is a unique deposit. Occurs on a very large scale, and that's what we're looking at from the get-go. We're looking at how do we achieve that? What do we need to achieve that? And what we've been showing so far with phase 1 is that we have that. We have something that's very comparable to our peers. To be honest, it's a lot better than we were hoping for, because we're already essentially getting the same values in the first phase of drilling. I always think it's very rare that if you're getting into a new project and your first couple holes are your best holes, I mean, you've got to be the luckiest guy in the world. That's probably not possible. So we expect that as we continue to drill, this area is undercover, that we're going to continue to see similar consistent mineralization, but also potential pockets of better grades that could drive the economics to be even better that they are, and at least pay for the initial capex, have that kind of starter pit type mentality. But really, I think there's the best is still yet to come.
Okay, the best is still yet to come. That's what investors want to hear. Let's talk about phase 2 drilling. So a few things to unpack here. I'm interested in how far you're going to step out. I mean, I think the drilling so far you've outlined, an area of about 500 meters by 500 meters. How big are you going to go here in phase two? Could we get up to 2,000 meters in strike extent by the end of this program? Maybe even more. Has the drilling started? And what are some of the key improvements that you've made in terms of road access and the camp during the winter?
Yeah, I mean, it's, again, this is back to the significance of being in Newfoundland, such a, one of the top desirable mining jurisdictions in the world for investment and for development, because the permitting and the government support is extremely good there. So we're, from the discovery that we made last year, we were essentially dealing with a 30-kilometer trend of a continuous nickel anomaly, and we didn't know exactly where we wanted to focus within that trend. I mean, 30 kilometers, it's hard to visualize, but this is a significant distance. This isn't something that you can, tackle very easily. So we had a very systematic approach about how we went, and we started to sample it. We've yet to do a lot of areas. There's a lot of targets that remain that we're going to continue to work on. But we've found an area that we believe is significant, and it definitely warrants more follow-up, and we believe we can build a resource around this area. So we were able to take that initial discovery, permit for additional drilling, which we're just starting now, and also permit for the road. So within the time between the last drilling program and now, we've developed road networks right into the RPM discovery area. So we're driving pickups essentially on top of the discovery zone, and so that's a huge cost. It's a huge cost up front, but it's a huge cost savings as we progress through the project. All of a sudden, all the access costs drop down to zero in the next several programs. So it's extremely beneficial for the project, and now we can continue and focus on stepping out on the RPM zone, continuing to define the significant extent. So that's, to your question, that's exactly what we plan to do. We're doing 200-meter spaced holes, 400-meter spaced sections, and we're just continuing to build this thing based on our perceived footprint of trying to achieve, at least 1 billion tons in this one zone. And then, the project potential is obviously that there could be multiple zones. There could be multiple zones of 1 billion plus ton material, which would obviously make this an extremely significant project.
Phase 2 drilling is underway, and it's a fully funded drill program of 3,000 to 5,000 meters, essentially. So what are some of the important changes between phase 1 and phase 2 that might be more favorable in terms of getting assay results faster, maybe lowering the drilling costs? Tell us everything about phase 2.
Yeah, essentially phase 2 is fully ground-based program. Obviously now we've established a significant area. We're looking at, the RPM as the primary target area, but it really encompasses the RPM zone, the Chrome Pond zone, and the Pipestone zone, all kind of blend into one large area, which, wasn't always, the initial understanding. But what we're seeing is, because this mineralization is so consistent on a large scale, we're essentially able to tie all these things together. And the way that we're going about doing that is consistent grid drilling, right? We're stepping out large step outs, creating different section lines along the strike of it to cross cut across the mineralized width. We have a pretty good idea based on surface exposure in between cover where we're seeing the right rock type. What we're seeing consistently is when we drill into the bedrock that the grades of nickel are better than what they are at surface. And, we're just looking at it as what's our end goal here? How do we get to 1 billion plus tons, outlining that area, and obviously going in, stepping into these, this zone and just defining it with consistent systematic drilling. So that's how we achieve the fastest pathway to get to a significant resource, obviously with the goal to be billions of pounds of nickel contained in an economically recoverable situation where we have good values of nickel alloy that can be easily separated using magnetic separation, and creating this high grade valuable concentrate that doesn't need to be processed in any other way. So that's our ambition. We understand that we talk about financing. Our strategic partner understands that. They understand the economics. There's a reason why these guys are throwing money at us, right? They're looking at the bigger picture. They're, potentially seeing an opportunity here that a lot of people might not understand, because this isn't a comparable project to other nickel sulfide projects, being high grade or low grade. This has a lot of unique characteristics and advantages, not just with the actual processing, but also when you're not having to deal with building a new smelter. Like, you don't have a huge energy consumption footprint for smelting material, whether you're burning coal or using hydropower. I mean, that regardless of how you generate that power, there's a huge energy requirement for processing traditional kind of nickel materials that we can completely avoid. So, obviously there's more to, the details of how it's processed. But when we look at it, it's very, in comparison, very simplified processing, very cost effective and very environmentally friendly on a large scale. The initial mine lives that we're looking here, 25 years plus, just to put into, a feasibility with, our goal of at least 1 billion tons and billions of pounds of nickel combined. And so we understand that. That's our goal. That's where we're moving towards. Our partner understands that. They've given us enough capital to complete phase 2 and even expand beyond that. So our plan for phase 2 is to utilize the funding, drill out at least 3,000 to 5,000 meters, and then also to do groundwork. Right, we're going to continue to explore, with our led by our very highly experienced technical team, to explore for other similar areas in this 30-kilometer trend. Like I said, 30 kilometers is not just an area where you can go and see everything right away. Like, even at a large scale, this is an immensely large scale property, and we have still a lot of work to do. So as we continue to build out an initial, what we hope will be an initial deposit, then the plan is to potentially identify additional zones, which would mean that you could potentially have 2 large-scale pits running, which means you could double your economics. And that's all kind of forward-looking future potential. But that's what we do as exploration companies, is we look for potential. We look, where can we find value, and that's what we're focused on, is building this value, creating an immense kind of valuable deposit, and trying to identify it and show that it is economic, and that's, we're focused on doing that.
Is it within the realm of possibility that by the end of phase 2 drilling, that you might decide to just go ahead and put a resource on the RPM zone or the RPM and Chrome Pond zones? I mean, is that, do you think you'll have enough, meterage, enough density to actually put an inferred, resource on this?
I mean, it's possible. Like, if you look at what we've already done, we've shown an area that's at least 500 meters wide, right? Like, we've defined a width of 500 meters because we have, end-to-end mineralization. So what we think is it could be even bigger. So when we start to do a resource calculation, if you're ending in mineralization and you go to do a calculation, you're going to get a buffer around that. They're going to give you, because it has to be independent. Like, it's not, that's the one restriction, is we can't create our own resource. We have to take our data that we compile and that we put together, and we have to take it to an independent company or group to actually make that determination. But when you're ending in mineralization, so I say they, I mean, it's the independent evaluators, they'll add an additional buffer. If you ended in mineralization, or if you drilled and you drilled out of mineralization, there would be a line, right? There'd be like, okay, the mineralization zone ends here. If you're showing that this mineralization is consistent and you're drilling and ending in mineralization, you'll get a buffer around that. So if you consider that and just around the 400 by 500 meters that we've already defined, you can already get a pretty significant number out of that. So yeah, I think there's totally the potential, as long as we continue to step out these 400-meter step outs, you can quickly put together very significant tonnage. We obviously don't want to stamp a number on it too early, because that can be misrepresentative of what is actually there and what the real economics could potentially be. But there's a balance, right? People want to know. Obviously, I think we'll be able to put together a pretty clear story about what the scale and what the size is in the next phase here.
Yeah, there is a balance. If it was a gold project and you kept hitting, I would say, no, don't put a resource on it at this stage. As long as you keep hitting, just let it grow and let everybody can make their own, allow everybody to make their own calculations at home. But with a, nickel project and a smelter free, nickel project, I think a resource, as long as it's approaching, like you said, that 1 billion ton mark, might still be actually a good idea. And it opens the company up to a whole new set of investors who actually have a mandate that, some of these fund managers cannot invest in really early stage stuff that doesn't have a, resource, because they just simply don't have enough data to analyze and to chew on. So that's an interesting question. And that's something I'm sure that we'll talk more about as the year progresses and the phase 2 program gets into full swing. I know a lot of investors are really curious, Adrian, about who is this strategic investor? Who is this partner? Who's loaning $3 million to a junior mining company? I'm just curious myself. What can you tell us about your partner?
So we have a NDA in place with our partner, and they've been very, very good to us. So I don't want to lose the confidence or trust for them, because I believe that as we progress with this project, that they will increase their investment. Obviously, that's not guaranteed, but that's my belief, and we will see hopefully within the next months or year that we can have another conversation about this. But again, like, this is their support obviously is allowing us to go and build this zone out and doing it in a very constructive way for the company. I mean, our last financing was done at a premium to the market. I mean, we're talking 100 to 200% kind of premium, and that just shows the kind of belief that they have in the value of the project. So as we go, I think we're trying to bring in capital in a responsible way that allows the company to grow. We don't want to go and just give out discounted financings, and we're trying to move away from issuing warrants and just get good, hard, long-term capital that will allow us to build this into a much more significant project moving forward. And part of that is getting, like you say, like, if you get to a resource stage, all of a sudden we can talk to large institutions that are actually mandated to have a 3 or 4 year kind of investment outlook, where they're giving you that opportunity, not only just with good capital, with large capital, but at very good prices to build it out long term. And it seems unrealistic to a lot of junior companies because it's such a difficult market, but we're already doing that. We're already doing the financings. We got this loan. I'd like to see another junior company that received a similar loan with no there's no kind of downside to it. Like, we don't have to pay interest on it for 5 years. There's no lien against it. Like, it's not secured by the property. So if we can't, like, if this is, you have other instances where the company might be more predatory and loan you the money, knowing that you're going to default on it, and then taking what you have because you had to secure it with something. We didn't do that. We have it secured indirectly to a royalty on non-core assets. So it gives them a bit of security. It's not legally secured to anything, is convertible, and there's no conversion to shares. They can't come and force it to be converted to shares. This is straight up like, here's 5-year runway. You don't have to do anything as far as repayments for 5 years. We believe in your project, and you're going to get bought out, and the buyout will pay for the loan. Like, that's the kind of ideology behind this, and that's the kind of belief that they have in this project. So for us, it's extremely encouraging. It's uplifting. It allows us to focus on what we need to do and not worry about raising enough capital to go through and make this discovery. And then with that relationship, as we move forward here, I believe that's going to grow into something more. And that's hopefully going to happen on the back of phase 2. I think we have a very high probability of being successful based on the success of phase 1 to continue that. And it's always a risk, but this is a very, in my opinion, a very high probability bet to take.
Yeah, I mean, the property, its location, the magnetic anomaly, the very prominent mag anomaly, the results from phase 1, this Pipestone fault zone, and how it may be a key factor in the Awa-Ruite formation, and maybe the fact that the DTR grades are a bit higher there around this key regional fault structure. It's all very interesting. It's all very encouraging, and it leads to positive outlook for phase 2 and the prospects for the entire project as a whole. Now, the metallurgy is really key here, and I think that in some sense it's just based upon the phase 1 results. It's less of a low probability will they hit and step out drilling. I think we can assess, or at least I can assess, that I think you've got a good shot of hitting on your step out holes and continuing to build this thing out. So it's more of a metallurgy science project, I think, from an investment standpoint. So tell us about what you've done in the off season. I know there was some switching of assay labs because one company is better with the DTR lab work than the other one. They're a little more equipped to handle it. Let's go into the metallurgy and the DTR process for those who may not be as well versed in that.
Yeah, I mean, essentially we're doing metallurgical test work on the drill core at the beginning of the exploration stage of the project. I mean, I don't think there's any other companies, or maybe very, very few companies out there that would even consider doing that. Usually metallurgical recovery test work isn't something that's done until you're into a resource phase, into the economic assessment kind of stage of a project. But we just have this understanding, this knowledge that, this is what's going to make this project work, and we need to know up front whether this is going to work. If it wasn't working, we wouldn't be continuing on phase 2. What we're seeing is it is working, and it is, there's huge potential here, and it's a very simple process. So essentially all the metallurgical test work is doing a magnetic separation. That's what the DTR, it's a Davies tube recovery. So it's a recovery physical test where you're crushing and grinding the material. You're putting it into a test tube that has magnets on either side that suspend the magnetic material in between the magnets. And then you're washing the unmagnetic material away and then recovering that magnetic material. And because the nickel alloy that is naturally occurring in our material on a large scale is highly magnetic, it is retained in that magnetic concentrate. And that's how we're doing. It's a very simple process. It's like your upfront crush, grind, and magnetic separator. It doesn't use any chemicals. There's no harsh environmental footprint. The tailings from that are totally inert, by the way, and they captured carbon on the back end of it. I mean, there's all kinds of extra potential that we're not even worried about. What we're worried about is how do we get the nickel out, right? And that's why we're doing this up front, because that's going to drive the economics of the whole project forward. So yeah, we're very focused on that. We've gone through one assay lab. We've actually gone to a second assay lab because that second assay lab is capable of doing more of a pilot scale test. So, in addition to that Davies tube, we're actually looking at doing real world testing, putting it into a full scale magnetic separator. And, one of my colleagues likes to always say it's like a pizza roller, right? Like you basically have this big drum that's rolling out like the dough, but it's picking up all of the particles of magnetic material in there, which in this case are nickel. And they're already in a metallic alloy state, meaning that it doesn't need to have any kind of secondary processing done to it. So you're basically picking up, using a magnet, a very clean product that you can, avoid smelting, avoid all the secondary processing, and ship, direct to an end user with a very simple additional upgrading to the material. So yeah, we're planning to have more news flow coming out on that whole process. I don't think we've talked a lot about that because it's something that we've been actually working towards, building an actual composite material, doing this larger scale test, which not just proves that, hey, we can get it out of the material, but we can create a saleable product. So we're actually moving through the process to create a saleable, high grade concentrate and prove that, we know that it's possible, but we're showing that, with our material, it can be done, and here's the proof.
Yeah, I think that's a really important point. First Atlantic has moved very quickly in the last 6 months, quite frankly. And a lot of junior exploration companies, especially like gold or silver ones, they're just going to drill. They're going to drill. They'll worry about the metallurgy down the road, You guys are doing it completely different. You're focused on the metallurgical testing, literally on the back of a small phase 1 drill program. And quite frankly, I can envision by the end of phase 2, not only could you potentially, publish a maiden, resource, but the metallurgical testing, the level of met testing that you'll do in 2025 will be quite rigorous, and it will really set the stage for a PEA or a PFS down the road. I mean, you're already doing a lot of the work that would be necessary for like an economic study of that nature. So I guess final question, Adrian, what can investors expect from FAN over the next few months? What kind of news flow can investors, expect from the company?
Well, we've just started phase 2 drilling. That's going to be a very aggressive drilling program as far as we've built the roads into the area. Now we have ground access. We see this as being a very efficient program that's going to rapidly produce new information for us, taking large scale step outs to build a potentially significant footprint for this project, this mineralization kind of envelope, and building out that to potentially show that there's at least a billion ton potential here is going to be a major milestone. I think that's going to create a lot of excitement from our potential partners. We are talking to a lot of different groups, and like you said, like a lot of them are waiting for more or have mandate to have at least kind of a resource kind of stage project. So that's our focus, is to get to that stage where we can bring in that kind of capital. That capital isn't buy today, sell tomorrow capital. This is long-term capital. This is how you grow a sustainable project and really build value in the company. So that's what we're focused on. Phase 2 drilling is obviously the first step towards getting there, and there's going to be a lot of news flow, a lot of exciting results as we're now out there drilling again. So this is the exciting phase, the discovery phase, as we continue to grow, and there's going to be a lot of groundwork and observations and more assay results and test work and metallurgical work, and like I said, the pilot scale kind of stuff, and the concentrate that we're we're working towards showing improving. So yeah, a ton of material and ton of content on the way. We've been extremely busy all throughout the winter getting ready for this, and now we're here and we're ready to go, and we're ready to show the fruit of our labor.
All right, Adrian, thanks for your time. Smelter free nickel.